What up, though, man? Hope everybody's having a great weekend. Look, man, I want to go over last Tuesday's trade where I took this nasty L for negative $597, man. This was on the 22nd, last Tuesday, July 22nd, 2025. So, look, man, as you can see, y'all, opening bell is over here, man. We had a nice move to the downside, bro. Like, great confirmation, great entry, great structure for entry, even for a re-entry right there. You know what I'm saying? I missed out on it. I missed out. I got distracted. I wasn't fully focused in the game, and that's my miss. That's my fault. But you can only imagine, like, with a nice move down like that, bro, the FOMO was real. Like, dog, this is like post FOMO. Like, dog, I missed out on something great. So listen, that's the first mistake, right? Me missing out on that great opportunity there. Boom, re-entry right there. Go down to the 1 minute time frame. There was another re-entry right there. You know what I'm saying? I missed out on that. It's cool, whatever. That's done. Now, this is another thing that I failed to realize is right down here where you see support is forming. Support formed and stabilized because that was a previous weekly level, and in hindsight, like when I did my back testing, I looked back to see why was price respecting this so much, man. First of all, this is a previous weekly level and it is a demand level, right? Price really respected this level close to a week ago. And not only was it just a weekly level, but it broke and retested out of a 9, a 21 EMA and VWAP, right? So in hindsight, had I had that data and knew, now I did not expect price to drop like this far down, right? I did not expect for that to happen. But also in hindsight, next time I know where price is dropping further down past a level that I did not mark up, I need to look over to the left. I need to see what's going on over there. I need to gather some data so I can understand context, right? This context shows that this is a strong demand zone, right? So price respected this level, and boom, if this would have been a cool entry for those who, want to take the risk. I mean, it's not a bad entry, but this entry is better than the entry that I took. So as you can see up here, my entry is here, right? That was 9:13 Eastern Standard Time, man. The reason why that entry was a bad entry is because I entered close to resistance, man, the resistance level, right? Way too close to the resistance level. It would have been better to enter at the bottom. And maybe my stop loss wouldn't have been hit, but that's neither here nor there, man. Listen, whenever you make an entry, make the entry as close to structure as possible for a better risk to reward. You want lower risk and a greater reward. That's the name of this game. It's business. You feel me? I took this way too close to the top, y'all. Way too close to the top. That's a resistance level. In hindsight, that was a mistake. And it's a mistake that I made quite often in the past, man. But hey, I learned from it, man. So not only did I make that mistake, but then my psychology got real crucial at this point, bro. I began to just try to recover from that revenge trade and got myself in a negative by $597, man. I was stopped out 4 times, bro. My rule is not to trade no more than 3 times in a trading session. But if I take 2 losses, I have to stop at 2 losses, and I didn't do that. So boom. Um, that was my second mistake. First mistake was the bad entry here. And the second mistake was that after my second loss, I continued to trade when I should have stopped. So bad entry, technical analysis, risk management, everything was just going crazy that day, bro. All right, man. So look, as you can see, y'all, this was the best entry. This is the second best entry right here. Okay. Why was that the second best entry? So look, man, when you look at this reversal, first of all, price held at a support for damn near a half hour, probably longer than that. Strong support level, bro. This trend line here, first of all, these are 5 minute structures, okay? This is a 5 minute trend line. That is 5 minute market structure. Price respected both of those, man. That is confluence right there. Not to mention, you can see the 9 to 21 EMA being respected. That's that red and yellow line that you see. We have an EMA crossover and we have volume, right? Volume supported this candle spike right here. Volume supported that. So where you see that orange circle, okay, the orange circle, boom, that's our high quality entry right there, man. Great confluence right there. Not to mention, y'all, a beautiful trend line here, man. We have a bearish trend line that was broken, okay? So we have a bullish trend line that was supported. We have market structure, strong support that held. And then we have this bearish trend line that supported as well, y'all. So this was a beautiful, man. Even if I could have just re-entered right here, Bro, look at this. Initially, when I took my trade over here, look at my risk management assessment tool, bro. Now watch this. My TP level was here, bro. Initially, that's where I wanted it to be, man. But instead, it didn't make it that far because this was a bad entry, and it wasn't a good. This area just wasn't a good area, right? We didn't have enough pullback, um, bro. It wasn't a good area. If I would have just waited for a better retest, price just reached that area anyway, dog. Like it went to that area anyway. So sometimes we're not necessarily wrong in our directional bias. We just have to get more surgical with our entries and enter closer to the structure level. And I would tell y'all this, man. One of the reasons why I don't enter closer to the structure level, it may be a little fear sometimes, like, dog, if I enter here, it may not go. But it's better to enter there and take the loss because you'll take a smaller loss than you would if you let price run for a while, then jump in. You don't want to jump in the middle of structure or closer to a premium level. It just does not make sense. Like if you have a Gucci bag, let's say a Gucci bag it costs $500. That's the fair price for a Gucci bag. Let's say that boy dropped down to 200, right? Boom. Do you think it's smart to catch the bag on sale for 200? Or you gonna wait for that boy to, let's say that same Gucci bag gets sold by a private vendor for a band for $1,000, right? What price would you rather buy the bag for? What's more risky? It's more risky to buy the bag at $1,000. That boy, that's a resistance level. That boy done marked up. You'll buy it there, right? And then let's say that bag start losing value and it drops back down, bro. Let's say it drop back down to the discount level, you don't lost $800 in value. It don't make sense, bro. Like you didn't lock in value. So, but if you got the bag at 200, that's like saying you got closer to the structure. You feel me? You at the demand level. So boom, buy the bag at 200 and then get out at 500. Sell the bag at five or get out the premium level. Sell it for a band and then you grab an eight. So man, that's I believe like if we just look at trading like that, from an investment standpoint, from a business standpoint, sometimes when it comes to our risk management, man, we'll be so far off. And I'm speaking to myself, man. So listen, this is a Tuesday, July 22nd, man. I took this nasty L, negative $597, but it's all good. Like I learned from it. You feel me? I back tested. I'm ready. Every time I take an L, I come back way stronger, way better. You know what I mean? That's why I say embrace every L. This was a bad trade, but we're gonna convert this to a cash day. And that's why if y'all clicked on my YouTube channel, man, you'll see like it's all about going from bad trades to cash days, man. You feel me? So look, this your boy Ron Legacy from bad trades to cash days, married to trading and everything, man. I'll see y'all this week. Level up, get better at those entries, be more patient for re-entries. Um, Make sure your risk management is on point, man, because when you have great risk management, bro, your recovery is a lot stronger. You feel me? We trade so that we can trade another day, man. That's it. This is all legacy type. Let's get it. BitLegacy.